to the Vaughan Nelson podcast. Today is the fourth quarter 2025 Vaughan Nelson International Recap. And with me today is portfolio manager Adam Rich. Welcome, Adam.
Thanks, Dan. Great to be here.
All right, Adam, before we even just jump into the quarter, let's briefly cover the investment philosophy and talk a bit about how the capital allocation framework shapes the way that you're building the portfolio.
Yes, so we believe that the market fundamentally misprices companies with improving return on invested capital characteristics. We've developed this framework called the capital allocation framework, which helps us identify these companies. We build a portfolio of 20 to 25 stocks that are investing in very unique ways that drive higher return on invested capital.
Great. Perfect. So this quarter, you had strong absolute performance. You had good relative performance as well. Can you walk us through, what you saw driving that outperformance, and maybe in particular, how industry positioning and some of the areas that you chose not to own also contributed to those results?
Yeah, we had a great absolute and relative quarter, like you said. Selection was positive, allocation was positive. But to your point, I think one of the key things that I wanted to highlight this quarter was that industries that we avoided actually was a really large contributor. And we keep track of this. It's in our quarterly letter. You can go back and look at it. But this is part of the framework, right? It's not just about finding companies who are investing while others are not. It's also avoiding areas that have excessive investment, and we believe by avoiding those areas will generate alpha. In this quarter, it was pretty high.
Great. And then, within the portfolio itself, any specific companies that contributed the most performance this quarter, and where do you see the biggest challenges or detractors?
Yeah, it was a great quarter. Like we just talked about, SK Hynix, YPF, and AstraZeneca were our largest contributors. The largest detractors were WiseTech Global, Mercado Libre, and Rheinmetall. All of these companies are making unique investments, and some of them are taking longer to materialize, like what's going on with WiseTech. But we're pretty optimistic about these companies still.
Yeah. And so let's zoom in a little bit on some of these individual holdings. So, do you mind walking me through, what you're seeing from the top contributor and the top detractor this quarter, and what each says about the capital allocation decisions that and how they play out?
Yeah, so we love to buy stocks where after we do research, it's so blatantly obvious that we have to buy it. SK Hynix, our top contributor, was that, right? The company was investing significant amounts of money in a very focused way. They were building capacity and research for HBM for NVIDIA. And that was great, but that's not all, right? The framework is not just about finding those companies. It's also looking at the industry and looking at, well, is anyone else making that same investment? And interestingly enough, Samsung on the other side of that was cutting investment. And so you have this massive delta in a growing market that created a huge opportunity. And so we're still excited about SK Hynix. It was a great contributor for us. On the other side, a detractor, which we're still excited about, is Mercado Libre. What happened in the second half of 2025 was there was a price war, and two competitors, Sea and Amazon, both smaller competitors to Mercado Libre in Brazil, announced price cuts to their commissions that they charge to sellers. And so that put pressure on the stock. But this is the largest company, they have the most scale. And what they did is they leaned into it. And what's happened since is actually a lot of these competitors have retracted those massive price cuts. So, it's going to take time. This is an unfortunate development, but they are the largest company and they're investing in a very focused way. And we think that that's going to drive scale in the years to come.
Good. All right. And then I'll talk about some of the changes you made. So, quite a few this quarter. At a high level, what was changing what was driving some of those additions, those exits, and then how do those reflect on your focus on the capital allocation and forward returns?
Yeah, we added seven new positions. I'm not going to go through all of them. Well, we'll go through them a little bit later, but pretty much what's going on there is we actually found a bunch of companies who we think are making very unique investments, and we're really excited about these seven new companies. We exited nine of them. I'll walk through a few that I think are pretty interesting. The first one is WiseTech Global. As you know, we're always looking for companies who are making big investments, and sometimes we're wrong on timing. And I think that's what's going on here with WiseTech. And so, we think that there is an opportunity here still, but right now, The investments are going to take longer to play out. Another company, Fujikura, one that we exited with a very high return at 300%, was a company who did exactly what we wanted. They were investing while others were not in fiber, in a very specific fiber, and the markets not only gave it credit for these investments, but also re-rated the stock to a level that we thought doesn't really justify risk reward. Some of the other names, just to call out, like Ashtead or DHL. These are companies that we still like, but the investments are just taking longer to pan out, and so we decided to exit those into these other new names. I think one thing to point out is that our holdings did decline from 22 to 20. We are a little bit more concentrated than we usually are, and that's just because we're being very selective right now as the markets have run to just the companies that we think can really work over the near term.
And maybe look at some of these new positions this quarter across different industries and some regions. At a high level, what were some of the common capital allocation characteristics that you identified that made those opportunities attractive?
Yes, platforms. We bought a lot of platforms. So let's talk about Technip FMC real quick. This is a company who's been building a subsea platform for years, and they are now starting to get paid for it. We still really haven't seen a big shift from U.S. onshore spending for capex to offshore, but we believe their platform is very uniquely positioned to take disproportionate market share over this next cycle. So we're really excited about them. We bought two pharma slash biotech companies called Daiichi Sankyo in Japan and Argenex in Europe. Both of them are platform companies. They have a delivery mechanism that allows them to go after many different targets. So every time they go after a new target, their cost drops and returns fall. They both have big platforms and big readouts in 2026 that we're pretty excited about. A few other ones to call out: 361 in India. They just consolidated UBS's position in India, and so we're pretty excited about the pro forma company. And Avanho Mines, I think, is a pretty interesting company from copper as they're scaling up one of their assets. Not a lot of growth in the copper world, but we're finding some here.
And as we take a look at the top five holdings, they span across different regions and different industries. Any common capital allocation characteristics that you give to the highest conviction positions in the portfolio today?
Yeah, I think that's really important that you just mentioned, right? They're in different industries. They're going after different things, right? We have two in technology, one in consumer discretionary, one in energy, and one in financials. And what they're all doing that's very consistent is they're investing in a very focused way and in an area where we think that returns are going to go up. And we can identify competitors who are allocating capital poorly. Give you a few examples. TSMC, our largest weight. Yes, we're really excited about their build outs of advanced nodes everywhere, but their competitors are not replicating it, right? Same thing with YPF, right? This is a company in Argentina. They're actually selling all their non-core assets everywhere to focus on their shale asset in Argentina. And we think there's exceptional growth here over the next few years. And UBS, we're in probably one of the final years of the Credit Suisse integration. So we should see costs fall and revenue jump here over the next few years that we're really excited about.
All right, so looking ahead, you've talked a bit about growing divergence between companies that are investing for durable returns and those that are just reacting to short-term pressures. How does that divergence shape where you're leaning, and then where do you continue to stay disciplined?
Look, I think it's really important to note when you start investing in international markets that capital is not free. Capital is very scarce, and not everyone can invest. And what's really important over the next 12 to 18 months as interest rates move up and economic activity improves, it's really important that you find the companies who can weather that and who can keep investing, and that's not everyone. And so the portfolio, as it's constructed right now, we've got 20 different companies across all kinds of industries and geographies, really unique investments. But what's consistent about all of them is that they have the capacity to invest to grow. And that's pretty unique in international and emerging markets right now.
Great. All right, well, Adam, that's a great place to close for the quarter. So let's touch on returns. In the fourth quarter of 2025, the Von Nelson International Strategy returned 7.39% gross, 7.12% net, and the MSCI All Country World Index ex-US returned 5.05%. Over the past 1 year, the full course of 2025, Vaughan Nelson International Strategy returned 51.64% gross, 50.18% net, and and against 32.39% for the MSCI All Country World Index ex-US. And last, across the numbers since inception, the Vaughan Nelson International Strategy has returned 30.43% gross, 29.16% net, and the MSCI All Country World Index ex-US is at 17.94%. And with that, that's a wrap on 2025. So thank you very much, Adam. Look forward to hearing from you soon.
Thanks, Dan.
The views, information, and/or opinions expressed during this podcast are solely those of the individuals involved and do not necessarily represent those of Vaughan Nelson and its employees. Vaughan Nelson does not verify and assumes no responsibility for the accuracy of any of the information contained in the podcast. The primary purpose of the information, opinions, and thoughts presented in this podcast is to educate and inform. This podcast, or any podcast in the series, does not constitute professional investment advice or services, and any reliance on the information provided is done at your own risk. Past performance is not an indication of future performance. By accessing this podcast, you acknowledge that the entire contents of this podcast are the property of Vaughan Nelson or used by Vaughan Nelson with permission and are protected under U.S. copyright and trademark laws. Securities discussed within this podcast may be held in the Vaughan Nelson strategies.